It's time for the Your Personal Bank Show with Ferenc Toth, President and founder of Secure Estate Management. Take charge of your financial future with your personal bank. Now, here's Ferenc Toth.
Welcome to Your Personal Bank Show. It's great to have everybody here. And, I want to cover, it's kind of interesting, I'm meeting with a number of folks recently, and, of course, from the radio show here and listening online at yourpersonalbank.com. Thank you, by the way. Getting a lot of great questions from folks when I'm meeting with them. But one thing that's come up that's interesting is, when I sit down or we meet online, go to meeting, whatever, with somebody to go over their personal situation, of course, I start asking a lot of questions, what your goals are, where you've been, where you want to be, how's it going so far, all that good stuff that, talking about you. And and a lot of people express a little bit of surprise that sometimes we recommend or talk about other financial tools and products other than your personal bank. Obviously, primarily, that's one of the things we do discuss quite a bit. And they'll say, I didn't know you handled other stuff. Well, yeah, I've been in the financial industry 22 years plus, own the agency. We do a lot of, we've done a lot of things over retirement planning, IRAs, 401ks, annuities, disability income, protection, that kind of thing. We have strategic partners where we work with trusts, whether it be revocable trust, charitable lead trust, charitable remainder trust, all kinds of different things that we recommend and work with closely with our clients and with our strategic partners, which again are many attorneys, CPAs, various kind of things, tax stuff sometimes, whatever is appropriate. And again, we do those other things and have for many, many years. As those of you who have listened, about 7 years ago, I was introduced to the personal bank concept. Of course, this is the Your Personal Bank Show, so our focus is on that. And sometimes I get asked, well, I get that. Why are you focused on the personal bank so much? Well, the reason is really actually pretty simple. See, we all know there's lots of information out there, whether it comes to, retirement planning, the IRA qualified plan world, the annuity world, you name it, any of those things. There's lots of places to go for information. That information is readily available out there. It's shared quite a bit. Some folks, even on this radio station, talk about those different topics, which is great. I mean, that information should be shared, but I find it much more common. For example, and again, I don't like to say this to brag, but, recently I worked on the advisory board. I was involved with helping develop 2 new annuity products on the market. And in my opinion, right now, 2 of the best products in the industry. I always say to folks, if you're looking to do an annuity, it's really quite simple. The reasons for doing it is, one, you either want to grow your funds, market type returns without the downside market risk. That's what an index annuity can do, a growth focused one. Or you want to create a guaranteed lifetiming. And there's 2 products in particular right now. Like I said, I was on the advisory board, helped create. I'm excited because one product's geared exclusively towards accumulation. And it's all about growth without, again, downside market risk, if that's an interest. And the other one's all about guaranteed income. Its focus is all that. And one of my pet peeves in the industry has been so many of the products, and talking about the annuity products for a moment, they try to be all things to all people, so they're good at most things and great at none. You know what I'm saying? So one of the things, and to the company's credit, recognize that problem and structured products that were singularly focused and were great at doing one thing. Like I said, accumulation or income, which is the 2 primary reasons, in my opinion, why people purchase annuities, which, there's people out there that are negative to them. We all know about that. But the reality is more and more people, the total amount of annuity business that's done in the United States increases, I think, just about every year. I think that's a statistical fact. It's been growing tremendously because a lot of people see the benefit of that, reducing market risk, market exposure, but yet getting potential for those gains, or again, wanting to create that kind of situation. I'm not going to spend a lot of time on all that because I don't want to. Again, there's so many other sources. And if you have questions on those areas, by all means, contact us, yourpersonalbank.com. Again, not to brag, I was a top 10 producer in annuity production some years ago, the number 2 largest annuity producer in the country. Very familiar with annuities, tremendous amount of experience, over 20 years experience in that arena. And like I said, when I run into a client or situation after we ask them their questions and their situation where that makes sense, of course, we bring that to their attention, and then help them understand why we feel like it's a good fit or something that makes sense for them. Back to the personal bank. Why do I share it and focus on that so much? Well, in my opinion, it's such an underutilized asset, tremendously so, with so little information out there, very limited, and frankly, very limited number of advisors or folks that are experienced or knowledgeable in this area. It's an area that's very much lacking, both in utilization and in education. So really my purpose, my focus, and my goal here with Your Personal Bank show is to enlighten, educate, and help people understand about this underutilized financial tool that most people, frankly, are not even familiar with. And I use the example all the time. I've spoken to investor groups all over the country, all over the Western U.S., actually, over the last 5 years. And typically, when I do a workshop or an introduction to the personal bank concept, if I have 100 people in the room, for example, and I ask them how many are familiar with a personal bank, concept, the financial tool, without exception, I've to yet have an exception to this, 2 or 3 hands will go out of 100. These are folks that even just looked at it. Not saying they even have the tool as a concept or using it. The thing is, again, it's a lack of knowledge, lack of education. Now, first question I get often is, why? Why haven't I heard about this from my financial advisor or other sources? There's a number of reasons why. But a few of the key ones, so I think the most common probably is, like I said earlier, just lack of knowledge, ignorance, and not in a negative terms, just don't know about it. And a lot of I find the vast majority of financial advisors I talk to and I run into in the industry have little or no understanding. They may have heard of it, but have very little understanding of your personal bank concept. And, it's funny, I have a lot of them, particularly because of the workshops I do and the radio show, come to me, talk to me, and asking questions. And they're intrigued. There's many that are intrigued or interested and want to learn more, which is, again, part of my goal. Get the information out there so people can know and make an intelligent decision. So I'm excited about that, and that happens all the time. But why do most financial advisors not really have much or any knowledge on the personal bank concept? Well, it's not a tool or a product that they handle in many cases. I find most cases it's just not available to them with the companies or whatnot that they work with. So if it's not a tool that you even have available or work with at all, why would you have a working knowledge of it? That just kind of makes sense. You know what I'm saying? So it's not like it's not their fault. It's just it's not something they do. And what's interesting is I find a lot of advisors talk about, well, we do a lot everything. We do lots of different things. And then I bring this up, the personal bank concept, and they're like, well, no, we haven't. No, we don't know much about that. So they put themselves out there as being kind of all encompassing, if you will. Yet again, in most cases I've seen, they're just not aware. And again, the other part, kind of the sad part, if you will, when you're structuring our personal bank policy, remember there's a cash account, there's a cash component, and then there's a death benefit component. And I've shared this many times on how a personal bank is structured differently than a traditional insurance policy. Remember, a traditional policy is designed as a death benefit protection tool. That's what a traditional life insurance policy really is. And one of the jokes I always make to people is I talk to them, I say, look, do you have life insurance? And, many times like in a workshop, many hands will go up, or I'm talking to somebody individually. And in most cases, I'll say, no, you don't. You don't have life insurance. What you really have is death benefit protection. In other words, you're paying a premium to an insurance company to cut a check to your heirs if something happens to you, right? It's not an investment tool. It might have some cash involved, but it's primarily designed as a death benefit protection tool. Now, again, that's not a negative. That's not a bad thing if you have a death benefit protection need. But the personal bank concept is designed to maximize cash. That's its purpose versus death benefit. I'm going to go into detail more further in the next segment on that, and also a little bit more why you haven't heard about this concept or why folks haven't shared it with you.
For more information on Your Personal Bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to your personal bank show with president and founder of Secure Estate Management, Ference Toth.
Welcome back. I was sharing the first segment, people being surprised when we talk to them about other products when we sit down with them sometimes because we find that's a good fit. People say, I didn't know you realize you handle all the things. Yeah, we do the retirement planning. We do the annuities, the disability income, deal with IRAs and 401ks, all those different things, trusts, But again, why do I focus on your personal bank concept? And of course, that's the show is focused on that. Why? Well, like I said in the first segment, it's really a lack of knowledge that's out there in general. I mean, I talked to 100 people in a workshop, and 2 or 3 have heard of it when I first start. I mean, that's kind of gives the idea of what we're dealing with. And that, again, people say all the time, why I haven't heard about this? Why did my financial advisor bring this to my attention? And again, there's a number of reasons. One I shared in the first segment is this lack of awareness. Don't handle those products. Don't deal with the tool. And again, if it's a tool that you don't work with or handle or deal with, you're probably not going to have a whole lot of familiarity with it. So it's just, it's just one of those things, naturally. Also, like I said, the second reason I find, again, this is not all of the reasons, but certainly some that I find most common is, and I had this happen in my own agency when we first brought this to the table. Remember, when a personal bank policy is set up, there's a cash component, there's a death benefit component, okay? I always tell people, think of your money as in 2 buckets, if you will. And the cash, of course, accumulates interest, gets credited. You have access to the cash. It grows, tax favored. Access to cash is a key to success financially, whether you're an individual or business. Most people know that. I've been sharing that a lot. Tax favored, if you can grow money income tax free, access it income tax free, pass it on income tax free up to certain limits, that's pretty awesome. And there's other things, specifics we got to get into it, but the personal bank structure properly can do that. And grow money so you have it available. I mean, those are positive things. But the thing is, when we're structuring one of these, if you remember, think of a teeter-totter. I've shared this thought before. You got a cash bucket, you got a death benefit bucket. And if you think in terms of a teeter-totter, most traditional insurance policies have a limited amount of cash or no cash. Term has no cash, for example. And it's, designed as a death benefit protection tool. And I find the vast majority of policies that I look at when folks have a life insurance policy, a question I get, hey, can I take my policy that I have currently and convert it to one of these personal bank policies that's designed to maximize cash growth versus death benefit? And the answer to your question is, well, maybe. It depends. And what does it depend on? Well, there's a lot of factors, but one, does it have cash in it? I had a gal contact me not too long ago, wanted to convert her term insurance policy to a personal bank policy. Well, there's no cash in term. And if you're going to convert it, you can convert the death benefit. Certainly qualify for that. But there's no cash that's going to come over because there's no cash in a term policy. It's strictly a death benefit protection tool. Like what I find the vast majority of insurance contracts out there are structured for death benefit protection. Now, death benefit protection is not a bad thing. There are folks like myself who have death benefit protection needs. My family, my business, as many of you have the same kinds of things. But understand what the tool is for. It's not to grow cash. It's for death benefit protection. There may be some cash, some limited cash involved with it to help it continue long term. But again, it's a death benefit protection tool. By the way, brings me to another reason why sometimes advisors don't bring up the personal bank. If indeed they're familiar with it, I would think they would bring it to your attention. But in some cases, folks have a death benefit protection need that outweighs their cash growth needs. So there are times when that is recommended. There's times we've done that too, where we've said, look, this would benefit you, certainly growing cash, but you've got some death benefit protection needs here that need to be addressed. And we want to look at the most cost-efficient way to accomplish that. Buy term, invest the rest has been one of those common mantras out there that we've all heard. Well, again, that's applicable, I should say, when a death benefit protection need is in place, okay? And that can be a way to go. But when you're looking at access to cash, reducing market risk, tax favored, the personal bank starts to make some sense, at least for a portion of those funds. So, again, why is a financial advisor not bringing it to my attention? Again, one, just lack of knowledge, not aware, doesn't deal with it. The companies they work with don't offer it. It's a specialty, okay? Most companies don't. There's death benefit protection needs that might outweigh your cash growth needs, okay? Although I think in that case, frankly, in most cases with a client like that, I would talk to them about both, of course. I'm going to go into this in a minute. Actually, in the next segment, I'm going to go into, that's the other part. Why do I talk about the personal bank so much? Again, lack of education, lack of knowledge, lack of awareness out there in the general public, the investor public, and in the financial advisor field. The financial advisors, for the most part, the majority of them I talk to just have little or no knowledge of this. So again, we're trying to change that. That's one of the main purposes of this show, is to bring that educational tool. Contact us at yourpersonalbank.com for more information. But I'm going to go in the next segment, I'm going to go into, why this makes sense, not for everyone.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to Your Personal Bank Show. We've been covering some of the questions I've been getting from folks meeting with them. It's been great. Folks contacting us, wanting more information on the personal bank concept. Again, contact us at yourpersonalbank.com if you want more information. Happy to talk to you. We can meet, do a go-to meeting, whatever makes sense. One of the questions, like I said, the first ones I get is surprised that we do other things. As I talk to folks, yes, we handle all types of different financial tools and products, but why don't we talk about it? Well, again, I find the focus here of this show, Your Personal Bank, is to get the information out there because there's such a lack of information about this topic. There's plenty of sources for everything else, including on this radio program or this station, on all types of other tools. And in fact, some of the folks even here around the station were pretty excited when we brought this concept to the table, and some of the comments were, wow, this is new, fresh, and different. Frankly, it's not really new, maybe fresh and different from what most folks are used to. This is an idea that's been around for decades and decades, okay? So this isn't a new idea. It's just I find not commonly well known by the general public investment community or the financial industry. Again, if you're the financial advisors and such, they don't deal with it. It's an area of specialty. And again, it's an area that's dealt with. High cash value, personal bank are dealt with in the arena, in the corporate world, in the banking world, and wealthy individuals deal with this much more commonly than the average individual. And we're just trying to bring it to everybody. The thing is, what I also find interesting, and when I do actually sit down and I talk to a financial advisor, I get a lot of them, a CPA, attorneys, who hear about the idea, or I run into them in a workshop, radio, whatever, and they're very intrigued, many of them, and they start asking me some questions about it. And when they start to realize what the personal bank can do, they're like, wow, I had no idea. That's the most common response. And then they have a great amount of interest in incorporating it in themselves and with their clients, just like we've done. There's an article here. I'm going to encourage, if anybody's interested in it, it's a Forbes article. It's called 4 Ways to Maximize Life Insurance and Retirement Income Planning. It's written by Jamie Hopkins. He's a professor of retirement at the American College. Got all kinds of designations, and he's a professor there. And he wrote a great article here. Again, if you want a copy of it, I'd be happy to send it to you. Contact us at yourpersonalbank.com. But he talks about 4 ways, and I'm going to talk about another one he doesn't even talk about here, in terms of how life insurance, properly structured like a personal bank policy is, can maximize retirement income planning. I mean, it can, as he puts it, insurance is a fundamental risk management tool for a secure financial lifestyle. He's right. With the market, fluctuations, uncertainties, wanting to reduce risk, this is a good way of going that direction, okay? And, let's face it, you can create support a retirement income on a tax-favored basis. If you do it right, you can access these funds. For most retirees, that can be one of the biggest devastating aspects, the way to devastate their finances and, wipe things out, if you will, pretty much, and not leave much for the survivor. We all know about those things. Well, a personal bank policy includes a Care for Life living benefit rider that can address, I can get into that in more detail if you're more interested, can address those long-term care planning issues just like this article talks about. But here's the last one I really want to touch on, this article, is non-market correlated asset. There's no doubt, no question, last decade, the markets have been, we've had the longest bull market in history statistically. There's a lot of people today with a lot of concern about what's going to happen going forward. When you have a long bull market run, the markets go in cycles. That's not news. It goes up, it goes down. We've had the longest cycle in history, and a lot of people are starting to be concerned about the next correction, pullback, whatever. What's going to cause it? How much is it going to be? How long it's going to be? Nobody knows. We're not going to know until after we've lived it. But having a non-market correlated asset can make an awful lot of sense. Now, this is a term that I really kind of want to address. We all hear about diversification. All the terms you hear is diversification, diversification, diversification. I've heard it thousands of times myself. And people kind of hang their hat on diversification as that's the way to mitigate risk. Well, here's what I have found personally, my experiences. When I first started in the financial world over 22 years ago, for many people, diversification had a different meaning than it does today. It's been an overused term, and the meaning has actually really changed. I say, it's changed. It's been bastardized, the term diversification. See, diversification today typically means you're diversified in different sectors in the market. Okay, I think most people would agree with that. What diversification used to mean is, from a financial standpoint, is you were diversified or you had assets in different financial tools. In other words, maybe you had some stuff in real estate. Maybe you had some guaranteed annuity CD type of guarantees. Now, today, interest rates are terrible. I get it. But that's what it used to mean. Someone was in the market. In other words, you were truly diversified in what's called non-correlated assets. I think non-correlated is probably a better term today than diversification. And what's a non-correlated asset? Well, it has nothing to do with how another asset moves. So a personal bank, for example, some annuities, CDs and such are guaranteed type of accounts that have, the market goes down, it's not going to matter. They're a guaranteed type of account. They have guarantees, backings against them and stuff like that. So they become a non-correlated asset. One of the stories I tell all the time is, I remember, the period after 08-09, not fun for a lot of people. And I remember I would meet with clients, and within 30 seconds, more often than not, if I was sitting down, particularly with a couple who were nearing or in retirement, I could tell if the majority of the funds were in the market or not, just by their demeanor. I mean, they were stressed out. They were worried. Most of them had lost quite a bit of value. And at that time, nobody knew if the market was going to recover. For their sakes, thank God it did. But at that time, nobody really knew what was going to happen. Versus I'd sit down with a couple who most of their assets were not correlated with the market. In other words, their income, their accounts, they had pensions, they had Social Security, they had annuity income, they had various different things like that. They were guaranteed or safe or consistent, if you know what I'm trying to say. And it was funny. They were lighthearted. They were enjoying retirement, just enjoying life. You could just tell there was a dramatic emotional difference. I run into this far too often. I'm meeting with a client. I'm looking at their financial situation, and the vast majority, if not all, of their monies are in the market, subject to stock market risk. Yes, they're diversified in most cases. But the reality is, if the market takes a correction, they're going to take a hit. And one of the questions I ask folks all the time, this is something to really consider. For some folks, that's fine. And taking on that market risk and right, that's fine. One of the statements I'll make all the time, which, you know what, I'll touch on this on the next segment. And what this has found, there's a lot of psychology behind this, but it's a great question to ask to determine whether if the market if you're in the right risk tolerance, if you know what I'm saying. That's one of those things. Are you truly, because a lot of people get pushed into more risk than they want or feel comfortable with, or even realize, because they don't realize there are other options out there. And again, that's part of the purpose of educating here with the personal bank concept, to help people understand, hey, there are other options that you certainly should consider. I'll talk about that in the next segment.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
We're rounding third. Welcome back to the Your Personal Bank Show. We've been talking a lot about today about why I haven't heard about the Your Personal Bank concept, either through financial advisors or other resources. Again, it's just not common. I find not commonly known, and that's one of our main focuses and purpose of this show is to educate and get the information out there so people can be aware of this financial tool that can be, frankly, in many cases, an awesome tool for folks that they just weren't even aware of that they could take advantage of. And then I'm referring to an article here by James Hopkins. He's a professor of retirement at the American College, all kinds of credentials behind his name, but a Forbes article that he wrote, 4 ways to maximize life insurance and retirement income planning. The information is there. It's just not prevalent. And, like he talks about 4 ways you can enhance retirement income. You can maximize a pension. You can address long-term care planning. And then the last one I've been touching on more is non-correlated assets. In times of uncertainty, in particular with the markets, most people I meet with, when I look at their financial situation, most, if not all, their money is wrapped up in the stock market in one way or another, and they're subject to market risk. And their defense, if you will, say, "Well, I'm diversified." Well, most areas of the market, when it takes a correction or a dive or whatever, like we saw in 08, 09, there were significant losses in place. Yes, it did recover, thankfully so, but at that point, nobody was sure, and there was a lot of stress, a lot of angst involved. How do you address some of that, have your money still grow, have some tax benefits involved, have access to those funds, but yet not worry about the gyrations and of the market and having too much of your market money at risk? One of the questions I ask people all the time when I see that situation where most, if all, their money is wrapped up in the markets, which again is very common. I find it much more common than most people would realize. I'll say, if the market took a correction of 20% in the near future, would that bother you? Would you lose a little sleep at night? And for some people, the answer is, I wouldn't like it, but it won't change anything. And I'm comfortable there. Okay, fine. That's a person that their risk tolerance level is probably they're in line with what they're comfortable handling. But what I find is when I ask that question, in the vast majority of cases, and I'm going to good guesstimate, and this is over 20 years of experience, upwards of 80% of the people I ask that question to, when they're in that situation, they're not comfortable. And they're like, no, I would lose a little sleep at night. Yes, it would bother me. I would be concerned. Because again, when's it going to come back? Who knows? Those are the folks that, and then the next question I'll usually ask them, well, then why are you where you're at? And the most common answer I get, vast majority of the time, is, well, this is what I was told, or I didn't know there was another option. And again, that's the purpose of the Personal Bank Show. Helping people understand there are other options out there. There are other financial tools out there where you can grow money. You can have access to money. You can get tax benefits. You can get a lot of the things that a lot of people are looking for. But it's not correlated to the stock market. It's called a non-market correlated asset, which I think is a better term or phrase to use versus diversification. Because today, diversification for most people means, well, I'm diversified in a number of different stocks and mutual funds and various baskets of stocks. But you're still in the same market. And if the market corrects, most of those are going to correct along with it. A non-correlated asset has nothing to do with that. And your personal bank, we have different options we can go with. There's an index option. There's a fixed option. Depending if you're looking for a non-correlated asset, that fixed option can make a lot of sense. That's where your money grows consistently, steady, every year. You have guarantees in place. You have tax benefits in place. You can grow the money income tax-free, access it income tax-free, again, if you use it properly. And you don't have to worry or be concerned about what the market is doing at that time, at least with that portion of money. And one of the things that kind of makes sense, and I was sharing this with a couple not too long ago. They were retired a couple years ago, retired engineer, very successful, had a significant amount, basically all their money's in the markets, had plenty of money. They retired, frankly, over $3 million. And they're not high flyers in terms of, their house is paid for. They're kind of conservative, normal, Midwestern kind of folks, if you know what I mean. And I said to them, look, and I've gotten to know them really well over the number of years as they've been clients, and they've set up a personal bank, a couple of them, but not nearly to the extent that I felt like, from a market risk standpoint, they should be considering. And I looked at them and I said, let me ask you a question. Do you guys feel like you have enough to be comfortable for the rest of your life, retirement, all that? And they're like, absolutely. We'll probably, never spend it all. And I said, here's the thing. If you're playing a game, let's say it's a football game, okay? And, we all know there's 4 quarters in a football game. You've played the financial game of life. They're retired now. They did everything right. They invested. They worked hard. They saved. And they've won the game. In other words, the ref's blown the whistle. The scoreboard has gone on. You've won. Congratulations. You won the financial game of life. You got more than enough to be comfortable, do whatever you want, pass on some of the kids, everything, all their goals, all the financial goals they ever had set out, they had met or exceeded. And then I asked them a simple question. I said, why are you still playing the game? They kind of looked at me and they said, you're playing a 5th quarter, you're playing overtime, but you've already won. Certainly, could you make more? Yes. But you also now have the potential of losing, don't you? You could potentially lose the game you've already won. Does that make any sense? And the gentleman looked at me and he says, you got a point. I never considered that, but you're right. Again, he's a logical engineer, very smart gentleman, very successful. He goes, I never consider that, but you've got a point. I said, and here's the other thing to consider. I'm not saying take all your money out of the market, but what I'm saying is there's an amount of money it's going to cost you to live. Food, shelter, clothing, right? We know that. The basics. He goes, of course. We could calculate what your cost of living is, and we could calculate a reasonable rate of inflation and an actuarial life expectancy. Okay? We could calculate that number. We could calculate what it costs for you to live for the rest of your life, for you and your wife. He goes, okay, yeah. Does it make any sense to risk that? Because we know for a fact you're going to need that money, right? He's like, absolutely. Does it make any sense to you to continue to risk what you know you're going to need? Because you got a point. So what if you locked down that number, whatever that is, that amount? You locked that down. Put it into a personal bank, annuity, or some other tool that can guarantee that income, that amount of money, what you know the necessities of life, what you know you're going to need. And then you took the rest and you continued to, he enjoys the market, okay? He does. I said you can continue to play in the market and do whatever you want. And in fact, if you did that, could you, I'm not saying you should, but could you be a little bit more aggressive knowing you've got your needs locked down, covered no matter what? So if you invest in something, took a little bit more risk, it worked out great, you win. But if you don't, it's not the end of the world because your needs are covered. You could afford to be a little more, take on more risk. He goes, wow, that makes a lot of sense. I've worked with folks like that for decades. It just makes logical sense. All I'm saying is, take a look at your situation. Just because what you've done to get where, congratulations, if you're like this couple that you've won the financial game of life, you have enough to be comfortable. Congratulations, awesome, you've done the right thing. But just because the actions and steps you've taken to get there doesn't mean those are the same actions and steps you should take to continue. Why? Well, markets change, don't they? The economy changes. and your life situation, where you're at in your stage of life changes. Protect what you know you're going to need. And your personal bank can be a great tool to accomplish that, among others. Be happy to talk to you about that, yourpersonalbank.com. Contact us for more information. Tune in to the Your Personal Bank show every Tuesday at noon on 1510 a.m. or 105.3 FM, and we'll look forward to seeing you next week.
Listen next week at noon for more information on Your Personal Bank. Contact Ference at 866-515-6280 or online at yourpersonalbank.com.
This show is designed to provide accurate and authoritative information. The presenter and guests on this program do not engage in rendering legal, accounting, or tax advice. Expert advice from a professional involving your specific situation should be sought, if required. Permanent life insurance is a long-term investment. Products, optional features, and riders may have limitations, restrictions, and additional charges and may not be available in all states. Withdrawals beyond principal may be taxable income. Excessive and unpaid loans may cause the policy to lapse. If a policy lapses, unpaid loans are treated as distributions for tax purposes. Replacements may not be suitable for everyone. There may be penalties and surrender charges when replacing coverage. New products may include new surrender charges and contestability period. Policy guarantees are based upon the claims-paying ability of issuing insurance company and do not apply to the investment performance or assets in the underlying variable portfolios. The life insurance and annuity products in this presentation are not FDIC insured, may lose value, and are not bank guaranteed.